Well, Powell said that the consumer would be in for the most amount of pain if the Fed failed to act and let inflation run out of control. Well, I got news for the consumer. Inflation is already out of control. The Fed failed to act. In fact, the actions of the Fed created the inflation, and it's going to get a lot worse. And Powell is looking at wages rising and thinks that that might push up inflation. No, rising wages don't cause inflation. Inflation is what's causing wages to rise. Wages are just the price of labor, and prices are going up, and eventually the Fed is going to stop fighting inflation when the recession gets much worse, and in fact, when it becomes a financial crisis. I mean, you're always going to see an ebb and flow, but in order to really fight inflation, we would not only need much higher rates than the rates we have right now, because rates need to be enough above inflation to encourage savings again, and our savings rate is basically at a record low, and consumer borrowing is at a record high, so that is not helping. But also government spending continues to increase, budget deficits continue to rise. You're not going to fight inflation unless you get cuts to government spending. Right now we're getting stimulative fiscal policy coming out of Washington, so everything is screaming more inflation, not less. I think you have to continue to recognize that the game has changed. We're going to be living in a high inflation environment for the foreseeable future. Rates are not going back down to zero, but they're still going to be negative in real terms. And you have to invest in real businesses that actually have earnings and pay dividends. That's why if you look at our strategies year to date, our value strategy and our dividend payer strategy have delivered positive returns so far this year in long-only portfolios, because we own the type of stocks that do well in an inflationary environment, and they're going to do even better as the U.S. dollar really starts to fall, because the stocks that I'm buying are not in the United States, and so their prices and revenues are not in U.S. dollars, and so they will benefit from the decline of the dollar, which is going to kick into a higher gear when I think the Fed stops hiking rates because the economy is too weak and it's got a bigger problem to worry about than inflation. I agree that the Fed is going to ease, but that's going to be a mistake. It hasn't gone far enough. The problem was it let interest rates, left them too low for too long. It already expanded the money supply so much that we haven't even had enough price increases to catch up with the previous expansion of the money supply. So even if it's growing more slowly now, it doesn't matter. There is so much inflation already in the pipeline. And the only thing that was keeping our inflation rate lower was the fact that the dollar was rising when everybody thought the Fed would keep hiking. But now that the dollar is falling, that is going to add fuel to the inflation fire. I think it's going to burn a lot hotter in 2023, but the economy is going to cool off even more as inflation heats up. And that is a no-win situation for the Fed and for the country, unfortunately.